Thoughts on the sofa, my nigga. I stop drinking, babe. The cloud on the hits me for leaving. It's like that indigo, it is a diva. Anytime that I smoke, the sky's been looking like white materials. Is it this or that? If I see you can't find how I feel inside, I won't let you know. I am super high, I can't feel my eyes. They say love is fine, but I can't see you. Oh yeah, the fantasy, 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 the fantasy.
Yo. Yo. Back. Review. Well, FOMC is about to hit. Let's just see what happens. It's a wait. Price could just, if you're in any trades or if you're prepared to be in any trades in the next like 2 minutes, price could dump. Price could whip up. We're back. We're live. We were on for 4 hours this morning. We might not have as many people on right now as we did this morning, but depends on if everyone's watching FOMC today. It's not something you have to watch, or not something you have to trade, even. You can always watch it, see what price does, learn some lessons too in between, because it's about to hit in like 40 seconds. But then at 2:30, we'll pull up the press conference, see how that impacts the market. Good thing I'm happy I closed a bit early on the partials. Remember, it went up after I closed, but I kept one entry. Let's see what happens. I mean, it's back in the zone we were kind of dealing with this morning. Literally retraced fully back. Chart still looks bullish overall. Oh. Oh. Oh shit. Might get out. Let's see, we got a bullish reaction. Oh, oh. Pip and dip if you can. I mean, that's the first reaction. FOMC came out as expected or as expected. Okay. Does that change the market's stance? No, maybe the market just keeps going up and regular. We were looking for buys this morning. Does that have to change what we were looking at this morning? Not necessarily. We were still looking at buys this morning on the session. Just things I'm thinking as price goes on. Trying to think in the moment. Oh. As expected. Came out as expected. So there's no shock to the market. There's no surprise. Okay. Now, this price remain in the structure how it is still in the next 30 minutes. Like we just got initial move. Initial move. Could retrace. 230 is what's more important because like this spiked up. Bullish reaction. back now. Remember this morning when we were talking about like 330. Like now we're trading above that, right? We were trying to close above 330 this morning. It's still early. Retracements, continuations, like we're still looking bullish on the chart overall. Like let's go. I have let's go. Let's go. I entered a little bit before too. Don't worry. But I kept a position from this morning and that could still hold. Like, I mean, it's only the first reaction of the candle, right? We had a crazy day today, guys. Like, if you still held on from this morning, or if you even re-entered, remember what I said? If you go watch this morning, at the end of this morning session, I was saying retracement back to the reaccumulation. Literally, I was saying this more, like, when we ended off today, I was saying, because I was like, oh, I just noticed something. I just spotted this, right? My magic arrows, fam. At the end of this morning session, we were on for 4 hours, and at the end, there's still a good amount of you guys on. There's still like 200 people on at the end. And it wasn't that long ago. I was talking about how we might test this reaccumulation because we literally watched the market accumulate this entire morning here with buyers. And we watched it run up, break a structure higher. So everything, like I even analyzed this play. That was the break a structure higher. We watched the whole accumulation this morning. Break a structure higher, retest of accumulation. This just sprung up. It's still 4 minutes, 5 minutes after the news. But nothing from, like, this was expected. So there's no really huge change here, maybe with the market overall. Like dollars dumping. Can that change 30 minutes from now? Maybe. But dollar is dropping off, selling off hard right now. That could sustain for the next like 15, 30 minutes. Gold price action, even though it's choppy high, you might see distribution. This is kind of like reaccumulation potentially. Like it looks weird maybe. Like a lot of traders might be looking at this market phase here, like it could be sells, right? Big sells, like a distribution or maybe a reversal happening. Well, we're still in an uptrend because of several factors. We know that going on in the world. Like there's a zone here. If you look right here, we respected that, right? Which is 25. I kept every session I've talked about 25, right? That 25 level. As long as we stay above 25, we're pretty much like maintaining still some demand underneath us here. We can see this morning, like it's still held here. So like this could be trying to arch up still, even though it looks like I could see why, because I used to struggle with seeing these types of patterns. And I used to look at these as like reversals and sells. But it's more of like an angle up. Like it's more like it wants to, like, to me at least, like a breakout up. More of that angle here with what the market's in. Whereas most traders might be seeing like, and I could see why, like you have your highs here, you sweep up, you come down, you make this low. Okay, maybe it's time for sells, head and shoulders type of situation. But when you're in an uptrend like this, you got to also kind of point out where's demand coming from. You know, where's the volume coming from? Where do we see volume? Still have volume in these areas where I'm circling. It's hard to say what's going to happen at 2:30 because when Powell speaks, it's going to have a whole nother reaction. It just had like one candle. I'm not going to look for sells. I'm only going to look for buy setups on gold right now. We'll see at 2:30 what happens, but that was pretty cool. FOMC, nothing crazy right now. We'll see 2:30 because this was expected. So the market really gonna probably just digest what he says at 2:30, the questions he gets asked. Sometimes you get like initial move retracement situation on FOMC like this. You can always get, there was one thing I put in here, like something like this could happen. Let's say this is a FOMC on gold right here. 2 p.m. was initial move. This is a 5-minute chart, so these are 5-minute candles. Then it pulled back for like 5, 10, 15, 20, 25, like 30 minutes, literally till 2:30. Powell started speaking, and it went up again. That could be like a classic, like, that's like one strategy for news right there. If you're looking at like a continuation of the move, a lot of traders will look at, okay, which direction did the news trade in? Retracement, continuation of that direction. It can happen on FOMC. I've seen it at times where like it's kind of happening on the 1 minute right now. It can happen on FOMC where initial move, retracement for 30, maybe we get retracement in the next bit of time once this candle slows down, but 3050 might go there. Like I said, I was even saying yesterday on Monday's session, I was saying we could probably hold these buys until Wednesday. So I was saying maybe 3050 we could go to this week. Maybe today or by tomorrow we get to 3050. For entries, it's hard to get an entry here. You need to watch like 5-minute. See the pullback that just happened on the 1 minute? You maybe want to see one, like if you're aggressive scalping, you could break it down. Like you get initial move, you could go up the time frames. Okay, 1 minute first pullback. I could enter after the first pullback on the 1 minute. Or it's like I could enter after I see the 5 minutes start pulling back. Maybe the 15 if I'm more comfortable with that. So like right now, just spiked up. For only time frame that really pulled back was the 1 minute. So it has like initial direction. Only thing we could see a pullback on is the 1 minute and some of that 5-minute candle, which was the 1 minute pulling back. So a lot of times it's like initial move, pullback, continuation. You could see that on different time frames as you kind of look at the chart when it's doing this, because this is 1 minute. The 1 minute we could see structure on it. 5 minute hasn't so much developed yet. The 5 minute could turn into that. BTC bleeding. What's new? No. I mean, oh yeah, nice. These, couple $1,000 moves now are just happen at any time. Yeah, we had some movement up. Usually, so when Powell speaks, someone asks him a question about crypto. He'll speak in like 20 minutes. He'll go up. It's kind of boring and sometimes longer than you might think it is. But he'll speak soon. You can even always watch like Bloomberg, see what they're saying.
Places like Germany and China complicate the story when suddenly there's
how are stocks reacting to like stocks? Like how's US30, Microsoft, maybe some stocks? How are they reacting? Are they going up? Are they going down? No, we can see some stocks having some bullish movement. US30 having bullish movement, right? So dollar bearish, as we can see. So maybe Bitcoin, yeah, like Bitcoin doing what it's doing, but maybe it still goes up.
I suspect if they have an uptick in inflation, it will come back to us, not $1 for dollar, but we'll see.
Bitcoin could probably still go up. Like look at US30, we got like US30 coming into FOMC, kind of like what gold did this morning. So if you look at US30, for instance, what's US30 doing right now? So if you look at like kind of like what gold did this morning. Gold was dropping into this morning's session. Look at US30 dropping into FOMC, right? Coming off of this structure. Higher high. Nice retest of all this. It's kind of like what gold did this morning. Gold this morning, we had a nice drop. Like, see, like, or here. This morning, gold's dropping into New York. I'm looking for buys. Still, it's making that move up. Just tapped 40. It's like now, see, like gold ran up. Now it's like the 5-minute could retrace and maybe give a pullback entry. You wouldn't want to chase price on these candles. It's either you're in before the news or you're looking for an entry 30 minutes after, 15, 30 minutes. This thing ran up though. We were looking for buys today. Yeah, these guys talk their talk, you know? Gold overpriced. Someone said in the chat here, gold overpriced. Yeah, definitely. I wouldn't say so. Because like everything going on in the world is why it's priced the way it is. It's where it is for a reason. I mean, like this morning was calling out buys, guys. It's higher from where we were this morning if you still held on from this morning. Even at the end of this morning's session. Crazy enough. Like, I want to show you guys because some of you guys might have not even been there. We were just live before this. 4 hours. 4 hours and 4 minutes. We got Little Caesars. Jeez. One day I'm going to order a full box of pizza. One day. One day. See what this ad just did? Some BS. Now what's this at? Yeah, gold's just ripping. What's new? Like right when we got off, damn, that's not the session. Bruh. That reaccumulation. I noticed that before I got off because it started pushing up. And I was saying, we can come down, retest this area. There's a reason I'm drawing it to there, right? Because that's the accumulation this morning. So I'm drawing it to draw back to the accumulation, right? Draw back to that. You know, we ran price. It's understanding, okay, how price was delivered through this. Like I watched accumulation happen, watched a higher high get made. So price comes from here. So drawing back to there would be ideal if it did that. Like if you notice this morning, I said in a perfect world, because like it's like if price does exactly this, like because price did this, if it draws back, it's like it's doing what it's supposed to, in a sense, what we would want to see, right, on the chart. So we were looking at the end of the session too. Like I wouldn't have spotted this an hour before or 2 hours before, right? It took time on the charts even just to spot this scenario. Right? I wouldn't have been able to kind of maybe think this an hour beforehand or maybe time beforehand, because the accumulation, you know, everything that I saw this towards the end of the session. I even said like I was about to wrap this up, but then I saw this, right? I even said that in the final minutes. I was like, oh, I was about to get off, but then I saw this, right? Which is like you have accumulation here. Accumulation phases. They're called schematics. Wickoff schematics. Accumulations, distributions. You know, some of that smart money stuff that a lot of you guys might learn and know about. Phases. Some people like to see them as head and shoulders. They're not always pretty and perfect, but your eyes get trained more to see them. That's what we were talking about, right? And what I'm seeing here is like, okay, this is what price should do based on this too, right? And that was here, right? That was right before we got off. Oh, psych. Right before we got off, looking for that move up. talking about the retest of the accumulation. Gold's still pushing. Is anybody holding gold from this morning? Anyone pay attention? Remember, I did say this at the end. We may come down. I even noted $3,030 as a key level. I kept talking about this morning because we wanted price to get above 3,030 this morning, and then it did. It just came back and retested it. Huge engulfing candlestick. I think it'll still go up, so any pullbacks you can get, even in like the next hour, could still just continue on gold. Might be now, look for pullbacks to like 35. I would love to get a nice entry, a nice re-entry, like a good one. Because like right now is not a good entry. Obviously it could go up from here, but I wouldn't want to put a big position and then go on a drawdown. So I'd have to wait a bit. I have an entry at down here from this morning. You'd have to wait for it to break up even. It's one of those situations now where even if price just keeps going up, you have to wait for a new high to get made and then that pullback continuation. It's likely to continue from the looks of it. But you'd want, like, since it already moved, it just made this movement, you'd want price to keep continuing. Show you its force, show you it has that volume. Give pullbacks continuations. You buy here, you face the chance of it doing a pullback back and then going up. So it could break through 3,040 level. If you're able to get above there, it's more maybe continuation above the level. You buy at this level. It could just easily come down and then give you a better entry. Looks like it wants to keep going up. We've been more bullish on gold the last couple months just because it's going with the trend more. Even last night, if you go on last night's session, this morning session, last night I even said if it goes to 3,030 or lower, I'll be taking buys on gold. Said that live on stream last night and then this morning. So hopefully some of you guys are still holding or at least got profits. Even if you closed and got profits, or if you just like, it's still a good trade. Yeah, you wouldn't want to buy it here. Just if anything, retracement would be better. It's gone up for 20 minutes. Retracement back into the zone, better entries. Or if it just keeps going up. That's why I like to do in instances like this where I know it could keep going up. Let price keep going up, form a high, and let it start to retrace. Yeah, Powell speaks soon. In a little bit. Markets are fluctuating. Gold delivered a strong move. Let's see, 30 minute. And a lot of times after 30 minutes, the market reverses on a news event. A lot of times after, like, it'll usually move 30 minutes one way, maybe 30 minutes the other way. Have a reversal of that movement. Buy stop, sell stop, not really. I don't use really buy stop. You have to find a range to do that. You got to be good at finding ranges if you're going to use buy stops and sell stops on news. So it's something not for every trader. Not for every trader, I'd say. Is that the music? Oh. No, I don't use buy stops, sell stops. I have, but it depends on the scenario. You have to have a range, like a good range maybe that you can find where you understand, okay, price could go explode above the range or it could go below the range. a level that it could break through, a high, a low before the news. It's good to find like a consolidation. You have to look at different news events and see like some NFP can do that. But you have to be, even on that type of strategy, like if let's say there's a market that looks like this before a news event, it's just sideways and there's a major news about to hit, it's very likely that it's going to go buy stops or sell stops, right? Under the range or under the lows, above the highs. But in that same situation, it's also like there's a likelihood that the market could quickly pull back and create a wick. So it can be a quick situation sometimes. We've been finding some good setups lately on the streams this morning. If I was on yesterday morning, it would have been probably the same scenario. If you look at yesterday morning, even the market ran up and then it retraced and then it found another buy at 330. Today runs up, finds another buy at 330. And what did it do after that? It retraced for a while. Got another buy. Might do exactly what it did yesterday. Price is doing what it did yesterday. Drops into New York. Drops into New York. Goes up, retraces, goes up. Goes up, retraces, goes up. Maybe this ends up like retracing again or like yesterday. Same time, same price. Accumulation, break above it, retest, right? Break above it, retest. I called that move out at the end of the session we were on earlier. Five minutes. This gold just going on the bullish run. Gold is not stopping. Yeah, 230 is about a hit, so like, I still wouldn't buy here. Like you, it's chill. Wait for it to come down, if anything. Crazy movements. I want to see the 5 minute retrace. Like the 1 minute's, the 5 minutes starting to drop. The 1 minute's the only thing that's like retraced. So it's aggressive if you're buying 1 minute dips, It's like the same thing we do, but the next candle, you're buying the candles. So even some little 1 minute dips here. Maybe the 5 minute can start a bigger pullback. And that'll be better. Even take profits. I'd like to see. Maybe if anything, it's only reason I like watching Powell mainly is to see if he says anything about crypto, to be honest. Yeah, like a lot of times this can happen to, like, you go up one direction, you go down, like it's almost 230. So like it's like from, I was kind of saying this morning, there can kind of be like two movements. There can be your, like, if you're on this morning stream, you might have heard a part where I was saying you can kind of have like two movements in a way. It could be like from 2 to 230, and then like 230 to, or 230 to 3. Like, see how it's see how it's 227 right now, about to be 228, like 2 minutes before 230 right now. And starting to sell off majority of that, like the direction it just made, it's selling off a little bit. You can just go on YouTube to search. Where is it? Here, I'll find it. It'll be up in a few minutes.
Focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions are solid, and inflation has moved closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We also made the technical decision to slow the pace of decline in the size of our balance sheet. I'll have more to say about these decisions after briefly reviewing economic developments. Economic activity continued to expand at a solid pace in the fourth quarter of last year, with GDP rising at 2.3%. Recent indications, however, point to a moderate affect future spending and investment. In our summary of economic projections, the median participant projects GDP to rise 1.7% this year, somewhat lower than projected in December, and to rise a bit below 2% over the next 2 years. In the labor market, conditions remain solid. Payroll job gains averaged 200,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and is held in a narrow range for the past year. The jobs to workers gap has held steady for several months. Wages are growing faster than inflation and at a more sustainable pace than earlier in the pandemic recovery. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year and 4.3% over the next 2 years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%. Some near-term measures of inflation expectations have recently moved up. We see this in both market and survey-based measures, and survey respondents, both consumers and businesses, are mentioning tariffs as a driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.7% this year and 2.2% next year, a little higher than projected in December. In 2027, the median projection is at our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. Looking ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. It is the net effect of these policy changes that will matter for the economy and for the path of monetary policy. While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their effects on the economic outlook is high. As we parse the incoming information, we're focused on separating the signal from the noise as the outlook evolves. As we say in our statement, in considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We do not need to be in a hurry to adjust our policy stance, and we are well positioned to wait for greater clarity. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. An admittedly challenging exercise at this time, in light of considerable uncertainty. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of this year and 3.4% at the end of next year, unchanged from December. While these individual forecasts are always subject to uncertainty, as I noted, uncertainty today is unusually elevated. And of course, these projections are not a committee plan or a decision. Policy is not on a preset course.
Full send.
As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly.
I wanted the 5
Our
minutes to
current
come
policy
down more.
stance is well positioned to deal with the
There
risks
she
and
goes.
that we face in pursuing both sides.
3,050, like I said, might be coming.
At today's meeting,
Set your
we also
TP
decided
there.
to slow the pace of decline in our balance sheet.
Might be there. Just hit
Since we began
45.
balance
Maybe
sheet
there's some
runoff, our
friction
securities
here
holdings
at
have declined
45.
more than $2 trillion.
You get the little pullback to
While market
40 and then
indicators
take
continue
off to
to
50,
suggest that
but
the quantity of reserves remains abundant.
she might be on the
We
way.
have seen some signs of increased tightness in money markets.
I'm in blue. I like blue, so
Beginning in
blue's a
April,
good
the
color.
monthly cap on Treasury redemptions
I told you guys.
from $25 billion to $5 billion.
Gold's strong. What's
Consistent
crypto
with
doing? Is
the
crypto
committee's
doing
intention
anything
to hold
special, or
primarily
is it
Treasury
just
securities in the longer run? We are leaving the cap
Back
on
and-
agency securities unchanged.
dollars dropping?
This action has no implications for our intended stance of monetary policy
Silver went
and
up.
should not affect the size of our balance sheet over the medium term.
Just hit 45.
The
So
committee
like,
also
you
continued
know, when it
its
hit
discussions
40,
as
it
part of our
dropped. It hit
five-year
45, it dropped a
monetary
bit.
policy framework. At this
Yeah, when it
meeting,
hit 40,
we
it
focused on labor
dropped.
market dynamics
Just hit
and
45,
our
might drop a
employment
bit.
goal.
Continue, but like,
As we have
damn.
indicated, our review will include outreach and public events involving a wide range of parties,
God.
including Fed Listens events around the country and a research
maybe-
conference in May.
I
Throughout this process, we will be open to new ideas and
see.
critical
We'll see.
feedback, and we will take on
it's
board
Wednesday.
lessons of the last 5 years in determining our
Obviously,
findings.
market could go try to make a
We
new
intend
all-time
to
high,
wrap
but
up the review by late summer. The Fed has been assigned two goals.
like, this is
for
going
monetary
pretty
policy:
strong, even on the
maximum
4
employment
hour.
and
Like the
stable
4 hours
prices.
taking out this whole entire
We remain
range
committed to
here.
supporting maximum employment,
Like,
bringing inflation sustainably to our 2% goal,
like
and keeping
when you look at the
long-term
4
inflation
hour, the
expectations
4 hours
well
taking out this entire
Our success in delivering
range
on
of
these goals
candlesticks.
matters to all Americans. We understand that our actions affect communities, families, and businesses across the country.
Right, we just
Everything we do
gotta
is in
wipe
service
that
to
whole
the
range
public
out,
good.
right?
We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I will look forward to
Literally,
your questions.
wow.
Howard Schneider with Reuters.
Break
Thanks for your time.
retest.
So, two things on sort of the real side here.
Just kind of
Inflation
sweep,
and
literally just sweep that
how much of
all-time
the
high.
higher
Yeah.
inflation forecast for this
At
year is due to
45.
tariffs, and since the policy path remains
But the 4 hour looks, this candle in the 4
as a
hours is pretty
one-time,
strong.
price level shock.
Even, yeah, like
Okay, so how much of it is
4 hour
is
looks
tariff? So let me say that it is
interesting.
going to be very difficult to have a precise assessment of how much of inflation is coming from tariffs and from other, and that's already the case.
He
You
even
may
said
have seen
uncertainty.
that,
He really just said it's
goods
going to be hard to
inflation moved up
how to
significantly in the first 2 months of
say a
the
lot
year.
about it.
Trying to track
See what
that
questions
back
he gets. He's about to get asked questions
actual
now.
tariff increases given what was tariff.
But,
very challenging. So some of it, the answer is clearly some.
Even
of
after
the
it's
good
been 40
part
minutes, like
is
I don't think
coming from
based
tariffs.
on even what I've
We'll
seen
be-
before
we'll be
news, like
working
it's
in
like
several other
price
forecasts to
still
try
could
to
keep
find
trying to
the
go
best
up.
possible way to separate non-tariff inflation from tariff inflation. In terms of the
Still been like 40, like, I
sort
mean,
of, looking through question.
Still
Too
time.
soon to say about that. As I've mentioned, it can be the case that it's appropriate sometimes to look through inflation if it's going to go away quickly without action by us, if it's transitory. And that can be the case in the case of tariff inflation. I think that would depend on the tariff inflation
price
moving
has
through
been
fairly quickly,
aggressive.
and it would depend critically as well on inflation expectations being well anchored, longer term inflation expectations being well anchored.
Well, I guess I'm looking at the out years here, and the fact that the policy path doesn't change at all, and inflation is unchanged in the out years also, doesn't that imply you all have basically decided that there is no signal here, and that it's just we're back to transitory again?
So I think that's kind of the base case, but as I said, we really can't know that. We're going to have to see how things actually work out. And the fact that there wasn't much change, I think that's partly because you see weaker growth but higher inflation. They kind of offset, and also frankly a little bit of inertia when it comes to changing something in this highly uncertain environment. I think there's a level of inertia where you just say maybe I'll stay where I am.
Thank you. Colby Smith with the New York Times. You just described inflation expectations as well anchored, but has your confidence in that assessment changed at all, given the increase in certain measures and the high degree of uncertainty expressed by businesses, households, and forecasters?
So on
Yeah,
inflation
word again,
expectations, of course, we
uncertainty.
do monitor inflation expectations very carefully, basically every source we can find, and short-term, long-term, households, businesses, forecasters, market-based. And I think the picture broadly is this. You do see increases widely in short-term inflation expectations, and people who fill out surveys and answer, questionnaires are pointing to tariffs about that. If you look in the survey world, if you look a little further out, you really don't see much in the way of an increase. Longer-term inflation expectations are mostly well anchored. If you look at the New York, for example, then you have market-based, and it's the same pattern. People in markets are pricing in break-evens. Some higher inflation over the next year must be related to tariffs. We know from the surveys. But if you look out 5 years or the 5-year forward, you'll see that break-evens are either flat or actually slightly down in the case of the longer-term one. So we look at that, and we will be watching all of it very, very carefully. We do not take anything for granted. It's at the very heart of our framework, anchored inflation expectations, but that's what you see right now.
And how much weight do you put on the deterioration in consumer confidence surveys? You said recently that this is perhaps not the best indication of future spending, but I'm curious, what you think is behind this deterioration.
I like money. I think money likes me too. Me and money, we synchronize together. Stay close to me, guys. All right.
Maybe moderating a bit, consumer spending moderating.
Come on, 3,050 or $2, a dollar, like 50 away.
Recently has been at a healthy level. Inflation
I had a good day.
started to move up now. We think
It's a good day to have a good day.
Tariffs and
Honestly, like,
delay in further
I'll give you guys the rundown. Like,
so that's the hard day.
it could, like, the 4-hour looks super strong, right? Like, it takes time. Now it's just time to give the market breathing room because FOMC is going to end, die down.
So how do we think about
But then
that?
does it
That is
revamp?
the
Like,
question.
we just
As
broke
I
out.
mentioned the other day, as you pointed out. The
Remember
relationship
we were
between
buying here
survey
this
data
morning.
and actual economic activity
Remember
hasn't
that.
been very tight.
All right.
There have been plenty of times.
It
where
started at like
people are saying
34,
very down,
31,
downbeat things about the
and
economy,
then like
and
28,
buying.
29.
But we don't know that
So,
will be the case here. We will
now
be
we're here.
watching very carefully for signs of weakness in the real data. Of course we will.
It was a good, like, if you held on, it was a good trade. Like, it almost hit
Our policy's
50,
in a good place,
hit like 48 point something.
to react to what comes.
To
and
get
keep
different
everything
entries, it's like you'd
stability
want
or for greater-
pullbacks,
for greater
or
clarity.
again, more extension and then a bigger pullback. The only pullback that happened was really on that 5-minute there, so it's been aggressive. So you want pullbacks. The 1 minute's been literally every 1 minute pullback was a buy. Every single 1 minute pullback since initial move was a buy. Usually I like to let the 5 minute give me a decent pullback. There was only one candle on the 5 minute, so some hesitation there. Usually, like, you can see literally every single 1 minute buy, 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 buy.
So I do like that definition.
After every bearish move on the 1 minute, literally it went into a buy. I noticed that. I was noticing that along the way.
Where people can make their daily economic decisions in businesses and they're not
Hit 45, went down, went up.
significantly high inflation. We know
It's
inflation
pretty much at
is
50. Like if we look at gold
stability.
future, gold
No, I
spot
think
price,
we
like
were betting
we're on
closer
spot
to
price here. When we look at gold,
say we were
we're
at
there at like
inflation
all-time
is running
highs,
around
pushing
2.5%
to.
for some time.
Getting above
I do
here
think with the arrival
is like
of the
break
tariff
and
inflation,
retest, go higher.
further progress
right?
may be delayed. The SEP doesn't really show.
It would be
further
like
downward progress on
basically
inflation
this.
year, and that's really due to the tariffs coming in.
Even like pulling back,
So
going up.
delayed,
There
but
could.
if you look at the
That's what you'd want in this
we do
scenario
see
because like
ourselves
the
getting
market's
back,
moved. If we're looking for different
right,
entries,
26,
it's
and
considered
then
where we
26.
were entering down here this morning. So why would we
I
want to
see
enter up here?
Progress having been made toward that.
If anything,
and progress in the future, I think
we'd
that
want the
progress
market
is
to come
probably delayed
down.
for the time being.
Or if anything, we'd want the market to keep going up and then come down if we're looking
So,
for a different
and
entry
people wrote down
on
2
buys.
cuts the last time, and they look at
It
the,
pretty much tapped 50 there, so like
they
all-time
wrote down,
high.
Meaningful.
I mean,
decline
good moves. If you're in gold,
from 2.1
I'd lock in
to 1.7
profits
in 2025.
before it dumps back, or if it gives that same move up, maybe lock in some profits if you're still willing to hold.
Those kind of balance each other out. So people.
You guys have seen the same thing every week. Like by Wednesday, Thursday, we're usually higher. By Friday, we're usually higher. Like you guys have kind of seen the same flow every week.
Really high uncertainty.
I've been teaching a lot about it, so it's just kind of like
It's just
going forward, knowing your plan afterwards and not chasing price when you get out. like knowing like if you have a position down here, if you have a position down here, you have a position down here, wherever, it's just knowing, okay, when you exit, you can't get those positions back. You have to wait for a better entry. That could maybe even come tonight. We almost hit 3,050. If I was buying, looking for an entry, I'd want a bigger pullback to happen first. A good retracement.
In terms of hiring, but we're seeing the hiring rates have been stuck at 2023, 2024 levels. So what's going on?
That was. We were right today. We were right about the market. On the buys for gold today, we looked for buys on Monday morning. Monday morning, wow, it's way down here now. Holy, it's like far. So scroll Monday morning. This morning. But no, I wouldn't chase price. I know the 1 minute's about every 1 minute has been like every single 1 minute has pulled back, but eventually I know that 5 minute could do a deeper pullback.
And the question is, which way does that break?
When you're in trades, it's always decision like what you can make, and then knowing like you're moving forward, how you have to act after, like knowing because if you have an entry here,
it's not a big hiring market.
it's pretty far. Like it might not come back to there.
What we've had is a low firing
Break-even situation.
And it seems to be in balance.
Me and him said situation at the same
for the
time.
last
Same.
6, 7, 8 months. That's where we are. There's healthy levels of job creation too.
The
So
buys.
it's the labor market that's in balance, and we watch it very carefully.
So then, have
I
we
made
seen
money. I could close. I might, my plan today was if I told myself if I had a successful day, successful FOMC, just gonna hit the withdraw button. Already, already worth it on the size of the account that I flipped for one of them.
For example, the layoffs that are happening.
This is why you gotta be on news too and watch, so you can learn like, okay, like look at all these 1 minute pullbacks that are turning into buys.
But at the national level, they're not significant yet. But we don't know. We don't know how far that will go.
But
We'll find out.
fam,
I mentioned that you saw it.
I called it out this morning.
Two very strong,
Couldn't find an entry live here on FOMC,
very unexpected.
but called out some stuff prior to.
Trace it to specific tariffs, but
Hopefully you guys were able to capitalize,
it's either noise. and
make
it'll come back
something,
and
catch something.
too, but if it is persistent, then it must be to do with
He's gonna talk for a bit, like he gets interviewed.
prices ahead of tariffs and things
Sometimes
like that.
people ask.
Those kinds of things happen, and they're very, very.
Sometimes he gets asked
because so much of it is indirect. A great example is
crypto questions, but
washing
not yet.
machines were tariffed in the last round of tariffs, and prices went up. But prices also went up on dryers, which were not tariffed. So the manufacturers just they just kind of followed the crowd and raised it. So things happen very indirectly, and so there'll be a lot of work done in coming months to try to trace all that through. But ultimately, though, it's too soon to be seeing significant effects in economic data.
Anything back into like the range.
Thanks, Chair
Where
Powell. You
we
said
just
transitory
came
price
out of,
increases
like,
from tariffs
downward
are the base case. Transitory is the base
reaction.
case. Wasn't it the base case last time? And didn't the FOMC forecast lower inflation ahead last time? And wasn't the lesson that it quickly got into services, haircuts, daycare, everything else? And so I'm just wondering why the 9 aren't taking that on board and are cutting
Sell
twice
gold
this
now.
year.
When you say last time.
I ain't trying to hyper trade right now. I ain't trying to be like, guys, enter exit. Like,
Of course, we're well aware of that, and it's still the truth. If
ain't trying to
there's an inflationary
Trying to
impulse,
hyper-trade
it's
it,
going to go away on its
to be
own.
honest.
It's not the right policy.
Sales could happen, but
Uh,
I've been
it's not
catching
the
buys
because
the
by
last
time
month.
you have your effect,
Like it could come down
by design,
and maybe set up for a buy.
or lowering economic activity.
5 minute just closed bullish,
That's
or
not
sorry,
necessary.
bearish.
You don't want to do it. In real time, as we know, it's hard to make that judgment. And we're well aware.
It's Powell saying.
What happened, obviously, with the
What's he
pandemic
talking about?
inflation. But I mean, we have to look at this as a different situation. There are differences and similarities. I mean, it's a different time. We haven't had real price stability fully reestablished
Gonna
yet.
dump
We have to keep
everything
that
now,
in mind.
or what?
And you know, we hear that people are very reluctant to take on to allow prices to go up. At the same time, we hear that businesses are
This is
intending to pass many of these prices
Solid
through. So it's hard to say how
what are
this is
people
going to work out.
saying here? I like to read the chat sometimes.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. The Bank of Canada, in its last policy statement, said monetary policy cannot offset the impacts of a trade war. What it can and must do is ensure that higher prices do not lead to ongoing inflation. I wonder if that kind of reflects your own sense of prioritization faced with higher prices and weaker growth, that the idea is you have to take care of inflation.
You know, so we have two goals, right? We have maximum employment and price stability, and we have to balance those. And you know, there can be situations in which they're in tension, right? And we actually have a provision in our consensus statement that says what we should do in that case. That's a very challenging, situation for any central bank, and certainly for us. And so what we say that we'll do is we'll look how far each of those two goals is, each of those two measures is from its goal, and then we'll ask how long we think it might take to get back to the goal for each of them, and we'll make a judgment because our tools work in one direction. Where the forecast is. I don't know any mainstream forecasts that really show significant problems like that.
Well, just to follow up, yesterday the UCLA Anderson forecast said there's high probability of a recession. Where do you stand on whether or not the slowdown you're seeing creates a higher probability or concern that you may have on recession? Thank you.
You know, there's always an unconditional possibility of a recession. It might be broadly in the range of 1 in 4 at any time. If you look back through the years, it could be within 12 months, a 1 in 4 chance of a recession. So the question is whether this current situation, those possibilities are elevated. I will say this: we don't make such a forecast. If you look at outside forecasts, forecasters have generally raised, a number of them have raised their possibility of a recession somewhat, but still at relatively moderate levels. You know, still in the region of the traditional
recession.
Extremely low.
What?
If you go back 2 months, people were saying that the likelihood of a recession was extremely low. So has moved up, but it's not high.
It's moved up, but it's not high. Buy gold. Fucking buy everything.
Hi, thank you. Chris Rugaber, Associated
Fucking
Press.
buy it all.
As you know, I guess last night the President
Buy
Trump
everything.
fired 2 members of the Federal Trade Commission.
Buy
an independent
everything.
Agency, and
We're going into a
this
recession.
could cause the kind of legal fight about
We're
the
screwed.
administration's power to fire independent people. If those firings stand, is that a threat to the Fed's independence?
Fucking buy everything.
Could he do the same thing to the Fed board?
He said it.
So
He said it.
I did answer that question in this very room some time ago, and I no desire to
He
change
said,
that
he
answer.
said, a few months ago, everybody thought the odds of a recession were really low, but now they're higher. They're higher, but not.
As you know, I wanted to go back to the consumer sentiment, particularly the inflation expectations in the University of Michigan survey. In the summer of 2022, you cited the rise in the long-term inflation expectations in that index.
There you go, recession,
as the reason that you went through with a
Bitcoin,
3/4 point hike.
recession, bro.
So I know you've talked about all the different measures now,
Text my
but
boy.
you seem to not be placing the same weight on that.
Buy it all.
And so I'm just
Buy
wondering,
everything.
Are you dismissing that, what we saw last week from the University of Michigan, or does that carry the same weight as it did in the past?
So I mentioned it back then, but in no way did I place a huge weight on it. I think that was a ex post story, but it wasn't the case. That was a preliminary reading, and so is this. And it's also, this is
Dog
the
with hat,
issue that
joke,
when
dog
you're
with
referring
hat,
to
start the
water
bull run or
pressure.
what?
You know, we look at it, we don't dismiss data that we don't like, we force ourselves to look at it, but it is an outlier compared to market-based and compared to other survey-based assessments of longer run inflation expectations. So we got to keep that in mind. And
Buy everything.
Again,
He said it.
I would just say we look at all of them, and that one's kind of an
Everything
outlier.
to the
but,
moon.
You know,
Dog with
nonetheless,
hat.
we take notice of it.
Dog with hat to the moon. Everything reacts
Mike
to that
McGee
word.
from Bloomberg Radio and Television. There's a worry on Wall Street. that when
45's
you say
holding
you want
on
to,
gold.
study
3,045.
the
It didn't come
fiscal
down to
policies
40.
we may see
Fuck, man,
on
I'm
the
looking for
economy
too
that
deep of
you would end up
retracements right now.
waiting too long and be behind the curve in responding to any
45,
return.
40. I marked some levels you guys might have saw there as I kind of took the camera off.
Early enough, unless
It's
you
oversell
want to
now.
be preemptive.
Yeah, look, we're aware of we're well aware of how things are going to evolve and the timeframes and all that. And, you know, we will. Use
Oh,
our
the
tools
short got
to
liquidated?
Our goals to the best we can. And of course, we're going to try to be timely. For right now,
Gold's still
our
going up.
data are pretty solid.
Bitcoin
are
short got
obviously aware of
liquidated.
the soft sentiment
Now we're at
data,
85.
uncertainty.
When we were on this morning, we were at like
Watching that
83s.
carefully, and
We're
we think
pushing
it's
towards
a
like
good time
86
for us
now.
To wait for further clarity before we consider adjusting our policy stance.
What's some of the other cryptos at right now? Ethereum, 2050.
Do you have a feeling that at some point you actually will have a forecast
XRP
you
already
can trust?
moved a lot today.
Yes, I think we will. It's hard to say when that will be. You know, these decisions are going to be made and they're going to be implemented, and
Algo,
we'll know
7%.
what the decisions are, and we'll have to make assessments then about the implications for the economy. Those things will happen. A lot of them will happen over the course of, you know,
Bitcoin just started pumping
over the course of the
after he
And
started
we'll be
talking
adapting as we
that
go.
recession shit. Like hard.
Hi, Chair Powell. Rachel Siegel from Washington
Still
Post.
pumping.
Thank you for taking our questions. At the beginning, you were talking about separating the signal.
Gold's holding at 45. Gold could still put like,
tariff
look
inflation.
at the
Can you
dollar.
walk us through what that looked like over the last couple of
You guys heard
months?
what he said when
Specifics from the January meeting to now that helped you.
it was
make
like
those
a few months ago, people didn't think that whole thing.
That's just a way of saying that things are highly uncertain, and that
There's the
you know
word
you're
again.
reading about developments. The news is full
Highly
of developments of tariffs being put on and taken off and things like that. That's some of that is noise in the sense that it's not really telling you anything. You're trying to extract a signal from that, and the signal is what's going to be the effect on economic activity, on inflation, on employment, and all those things. So that's really when we say signal and noise. Sorry, the second thing was.
Or similarly for tariff inflation, non-tariff inflation, ways that you're making the distinction.
That's sort of a special case of that. You know, the idea being, and I do think that the first 2 months of this year are a great example. You've got high readings for goods inflation after a string of readings that average close to zero, and you have to ask, it's coming during tariffs, but you know, you can't. It's very hard to actually scientifically go back and match up those increases and say, yes, I can prove that that's from
Still
tariffs,
gonna be a
but it kind of has to be
roller
to some
coaster
extent. Plus noise. There can be idiosyncratic readings in various categories, which will shortly reverse, and that happens too, and that could be a big piece of it. You know, I think we'll know. In a couple of months, we'll know whether those were, you know, where that really was from. But that's another case where I think it's going to be very, very challenging to unpack
45.
the inflation that we see over the course of this year and be able to say with confidence how much of that came from inflation and how much of it, from tariffs and how much of it didn't. But that's what we'll be doing. We'll be doing that, and so will everybody else, and we'll all be trying very hard to make that assessment. And, you know, I'm sure we will make a lot of progress on that, and we already have. But it's going to be a challenge.
Do you have a sense yet as to what in your mind would make something cross from noise to a signal, what that threshold would look like?
You know, it would depend on what we're talking about. I mean, obviously, you're looking for direct evidence that particular pieces of inflation are or are clearly not caused by tariffs. For example, if it's something that was, you know, in the service sector that was far away from anything that's tariffed, you might think, okay, well, that is, like, frankly, housing services inflation, which, by the way, has been behaving well, you know, which for some time was kind of our problem. Now it's slow, but it's definitely, you know, moving down in a very good way. It's more now with goods and to some extent with non-housing services inflation.
Thanks for taking our questions, Chair Powell. Kelly O'Grady, CBS News. So consumer sentiment has dipped dramatically, but you say the economy and the hard data is still solid. What is your message to
technically, since 2021, we've technically been in a recession, like slow, silent depression in a way.
About past inflation, really. There was inflation in 21, 2, and 3, and prices went up. The current level, it's not the change in prices. It's they're
I think they're just
unhappy
easing
and
it,
they're not
easing
wrong.
us into one
Prices went up quite a bit.
catastrophic
They're paying a
event.
lot for those things.
Yeah, like the 4 hour range got taken out completely on gold. Like that 4 hour range is gone. So like, we're still more bullish. Like price is bullish on gold, still. And the guy just said, it was crazy what I heard. One thing I heard was what he said like a few months ago. People didn't think we had a likelihood of a recession, but we're closer to one. We're not high, but we're,
it's a pretty good economy. But
it's crazy.
People are unhappy because of the price.
What does that mean, guys?
And I do completely understand and accept that.
It looks like the market kind of reacted.
I think if you
Market's kind of happy with what he's saying, I guess.
came into this with, at the December meeting,
Some of the market likes what he's saying with crypto. I mean, it doesn't mean crypto's a roller coaster ride. It doesn't mean just because we see it going up right now, it's just start of a bull run on the bottom. It doesn't mean just the bottom's in. It's like there's always flushes out, liquidations, surprises, and
modest,
it's a roller coaster ride. Just because you have a significant day here where there's nice price action we're seeing doesn't mean it's all sunshine and rainbows
people just said, okay,
yet.
I'm going to stay here. But the second factor is it's so highly uncertain. Is just, we're sitting here thinking, and we obviously are in touch with businesses and households all over the country. We have an extraordinary network of contacts that come in through the reserve banks and put in the beige book, and also through contacts at the board. And we get all that, and we do understand that sentiment has fallen off pretty sharply, but economic activity has not yet. And so we're watching carefully. So I would tell people that the economy seems to be healthy. We understand that sentiment is quite negative at this time, and that probably has to do with
just be honest, man.
Turmoil.
Everyone's in debt. Everyone's broke. Like, just be honest, man.
In areas of policy,
seems to be.
That's probably part of it.
The economy seems.
I do think the underlying unhappiness people have about the economy, though, is more at the price level.
Victoria. Hi, Victoria Guido with Politico. I wanted to ask, first of all, if you could clarify. You were talking about how tariffs were a good part
Someone
of
said gold below 3,000 soon, and I like seeing what some people say in the chat because I've been seeing some funny things that are like.
Already been put in place. Is that anticipating some of the tariffs that might be coming?
I mean, it's,
on April 2nd?
to me, gold's closer to 31, like on the way higher than it is on the way lower in a way.
Did that have anything to do with
Like it's closer to going higher than going down.
raising the debt ceiling that affect the reserve supply?
So
everyone has their opinions.
See that there's not further progress.
Look at the Pepe. What's Pepe do? I keep seeing so many people say Pepe in that freaking chat.
We don't ask people to write down how much
Why?
of this is
Why Pepe? Like.
But some of it is from tariffs.
Yeah, have a good day.
Tariffs are coming in. We know that they're probably already. All forecasters have tariff inflation affecting core PCE inflation, core CPI inflation this year.
Yeah, like crypto likes whatever's
so
talking right now.
I can't tell you how much of that it is. In terms of the balance sheet, so yeah, I think, I guess the way I'd say it is, it was the flows in and out of the
clearly gold does
the TGA that got us thinking about it. But as we thought about it, we really came to the view that this was a good time to make the move that we made. And broadly committee that came around to the view that we would do the same thing we'd already done, which is I guess in June, was it June, whenever it was, we lowered the pace of QT, and we're just going to do that again. We're going to cut it roughly in half. And the sense of that is, if you're cutting the pace of QT roughly in half, then the runway is probably doubled. Okay, so it's going to be slower for longer. And people really like that. People thought that's a good idea. It's like a plane. You can think of it like a plane coming in for a landing. As we get closer, and we by the way, we still think that reserves are abundant. Although you begin to see some of the things we look at begin to react a little bit, but we still think that they're abundant. Now, of course, now the TGA is emptying out, so reserves are higher now, so you can't really see the underlying signal. So we came around to the view, and it had a lot of appeal, and so we did it. It has no implications at all for monetary policy. It has no implications at all for the ultimate size of the balance sheet. It isn't sending a signal in any hidden way that you can try to tease out. It's just not there. We're basically, it's very consistent with our plans in our practices that we've published and that we've followed since we began this, what is a very successful, rundown of the balance sheet. Again, the second time that we've slowed the pace, and we've said that we would stop when we were somewhat above the level we judge as ample. And clearly, we're not at that level yet, but we're going to be approaching it more slowly. It's a common sense kind of a thing, and it had pretty broad appeal, I will say.
We went from sell to buy. Oh, let's go. We're back.
Claire Jones, Financial Times. You said in January, Chair Powell, that inflation expectations remained well anchored. Would you still say they remain well anchored today? And just to reiterate the question others have asked, if they're not so well anchored, why hasn't there been a more radical shift to the policy path today? Thank you.
So when we talk about inflation expectations being well anchored, we're talking about longer run inflation expectations. And they really haven't moved much, I mean, if at all. There's one reading that everyone's focusing on that's higher, but the other survey readings and the market-based readings all show relatively, well anchored inflation expectations. You would expect that expectations of inflation over the course of a year would move around because conditions change, and in this case, we have tariffs coming.
Well, it's good chat. What you guys saying?
So many things we don't
I'm
know.
just listening to Powell.
There are going to be tariffs,
and just
they
trying to
tend
gather
bring
information
growth
right
down,
now.
they
I'm
tend
looking
to
at
bring
news.
inflation up in the first instance. So I would say, I'm not dismissing what we're seeing in short-term inflation expectations. We, as I mentioned,
Bitcoin's
follow that
pumping.
very carefully.
I mean, that's
but
always
when we
good.
say expectations are well anchored, we're really looking at longer terms, 5-year and out, and there's really no story to tell 5 years and out, either in market-based or in surveys. But we'll watch it. I mean, we're not we're not going to miss any evidence that longer term or medium term inflation expectations are moving.
Chair Powell, Neil Irwin with Axios. Treasury Secretary Bessent has observed that a large share of job growth over the last couple of years has been in what he calls government or government adjacent sectors, healthcare, education. Do you agree that there's some weakness in underlying private job growth? And do you see the composition of job growth as something that has policy implications?
So that has been the case. We talked about that over the course of the last year. There were some good number of months and times when a lot of the job creation was concentrated in educational institutions,
3,050.
State governments, things
Wait
like
for
that.
it. It's almost there, guys.
Times
If you're
when
still
private sector job growth has been moving at a healthy
Wait on it.
rate. I mean, they're all jobs, but and remember we're at very low unemployment for quite a time now. So I think it's a good labor market.
Gold
but
might go
it's
to like
it's
30,
something that we
could go
monitor
to
carefully.
3,100.
From our standpoint, employment is employment. But the
Bitcoin's
elected
strong
government is
now.
entitled to have we don't have policies that address.
This is funny. The guy, the short whale,
elected government has a
is
different
now a
role.
long whale.
They can have those.
Here's a quick QT question. Does the committee envision at some point tapering the MBS runoff as well?
I think tapering it, I don't know. There's no plan to do that. At a certain point, we'll stop runoff. And we may or may not stop MBS runoff though, because, we want to stop runoff in net at some point. We haven't made any decisions about that. We want the MBS to roll off our balance sheet. We really strongly desire it.
Crazy.
But we haven't made any decisions about that.
Crazy.
I think we'd look carefully at letting that
These
keep
pullbacks
going,
are aggressive,
the
but
overall size of the balance sheet.
trending news here. Pullback.
At some point, a point that we're not at yet.
Same thing will probably just flow on because gold's bullet. Oh,
Simon
I'm gonna get.
The
Oh
Economist. Thank you,
shit.
Chair Powell.
Fuck.
Several times today you said that you feel you're well positioned to wait for greater clarity.
I told y'all. Target reached.
At the moment. We see the stock
Pip and
market
dip.
that's gone quite wobbly.
I told you guys.
Rapidly cooling housing sales, plunging confidence surveys.
I did
Today,
say
not
it was
only
gonna hit
the S&P marked down the growth
$3,050.
outlook, 17 of 19.
Like on Saturday
see risks to the
and
downside.
Sunday
So my question
and Monday
is, how confident
and
are you
yesterday
that you're well positioned,
and
or is
today.
that one more thing that you're uncertain about?
I'm confident that we're well positioned in the sense that we're well positioned to
GG.
move in the direction we'll need to
GG
move.
Buffon.
I don't know anyone who has a lot of confidence in their forecast. I mean, the point is we are
Is that the final bump?
Place where we can cut,
I think it'll
clearly a restrictive
figure itself
stance
out,
of
but
policy.
that would be a good TP,
And that's
honestly.
what I mean. I think
Wait for tonight. We'll be back on
position.
tonight. Maybe find another trade.
Forecasting right now, it's forecasting
Probably
is
will.
always very, very hard, and in the
New
current
all-time
situation,
high.
I just think its uncertainty is remarkably high.
And sorry, Stanley.
He just said uncertainty is
paused,
remarkably high.
To pivot back towards rate cuts in May.
Yeah, gold, new all-time high.
Like I think we're not going to be in any hurry to move,
I still think it remains as like
we're
bullish,
positioned
like overall, like
to wait
intact.
for further clarity, and not in any hurry.
Like even here, you have this high. So I think overall, like there's something strong there with the demand in it.
The Fed statement released
Until there's a day where there's a huge trend shift and we're a week or a time where it's like, okay,
employment and inflation goals
does
are
that happen
roughly
today?
in balance. Can you explain the decision to remove that line? Does it mean that you're now more concerned about inflation or about
need like a
what-
good, like
Actually,
look
it's
at
not
now
really
it's above that 50, like it literally
you
went
know,
from 45 to 50.
sometimes
So I would
with
watch
language,
those levels.
they
Like if it comes down
lives its
to
useful life
3040, 3040. It's really what I wanted when it was back here. Something like this, like a pullback situation where you get a deeper retracement, 3040 or 3035. For now, looks like we're literally above that previous all-time high now. We broke above. We may stay above it. We may just maintain, like, price is strong, and especially, I guess, everything he's saying.
And this is in the pages. Like
He keeps
10,
saying
11,
the word,
12 of the
I've heard him say
S&P.
uncertainty
If
like
you
so many
look,
times.
Participants widely raised their estimate of the risks to of uncertainty, but also of the risks to growth and our employment and inflation mandates. That's a more salient point now than whether they're in balance.
Just on the stock market, the stock market has obviously declined significantly since the Fed last met. Are you concerned at all about some of the market volatility having a real economic impact in terms of hurting business spending or consumer spending, especially among higher income households?
So financial conditions matter to us because, financial conditions are the main channel to the real economy through which our policy has its effects. So they're important. But what matters from a Fed standpoint for the macro economy is material changes to overall financial conditions that are persistent, that last for a while, long enough.
Skyscanner's top shelf. Saves us 30% on average when we compare flights and rental cars. Isn't that right, babe?
Oh, yeah.
If Mumsy keeps sniping sweet deals on Skyscanner, we might be able to finally grow those playoff beards.
We're going to the playoffs?
Thank you, Skyscanner.
Lather, rinse, repeat. It never feels like enough. It's not your products, it's your what.
I'm not going to opine on the appropriate level of any market, equity, debt, commodities, or anything like that. And I would just point you to the bigger picture again. The real economy, the hard data, are still in reasonably good shape. It's the soft data, it's the surveys that are showing, significant concerns, downside risks, and those kind of things. We don't dismiss
Old guys
that. We're
talking
watching it carefully,
nonsense.
but,
Gold is the only thing that will
we
go
don't
up
wanna get
now.
ahead of that. We want to focus on the hard data. If that's going to affect the hard data, we should know it very quickly, and of course we'll understand that. But you don't see that yet.
So many opinions in that chat. That chat's crazy.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. As you look to navigate higher inflation and lower growth, the Fed has talked about heeding the lessons from the 1970s. Is the Fed willing to have a recession if it means breaking the back of inflation?
Well, fortunately, we're in a situation where we have seen inflation move down from.
Real quick analysis on gold. So at 3,045, you have that high there, and at 3,040. So like we could stay above 3,045 because there's a previous high there. And then you can also see at 3,040, there's a previous high there.
Basically 2.5% inflation.
Solana news.
2% growth.
Apparently.
4% unemployment. So
what's going on with that?
That's what we did. That's what together the economy accomplished.
Sol ETF
I
tomorrow.
don't see any reason to think that we're looking at a replay of the 70s or anything like that. Inflation, underlying inflation is.
Oh yeah.
still
Bloomberg,
going into
I'll
twos
repost breaking news.
with probably a little bit of a pickup associated with tariffs. So I
Oh
don't think we're
shit,
facing,
that would
I
be
wouldn't say we're in
decent.
a
I
situation
mean,
that's
by the
remotely
news situation.
And last month, the idea of a Doge dividend was proposed, which would send $5,000 checks to every taxpayer from Doge savings. President Trump and Elon Musk have supported this. There's reports there could be a bill introduced on Capitol Hill. What impact might that have on household savings and spending in terms of your growth and outlook for inflation?
it's not appropriate for me to speculate on political ideas or fiscal policy for that matter. So I'm gonna pass on that one. Thank you.
Jerome. Typical Jerome.
Hi, Chair Powell. Daniel Avis from Agence France Presse. You mentioned that tariffs are already having at least some impact on inflation. I'm just wondering how you and your colleagues on the FOMC have been thinking about the possibility of retaliatory tariffs from other countries, especially with April the 2nd coming up. Was it something you considered during this meeting? Thanks.
So since the very beginning, we've had kind of a placeholder. The staff has a placeholder of a range of possible outcomes from tariffs and from trade policy generally, and they generally assume full retaliation in those, and so that's kind of baked into the numbers. What happens? It will be complicated, and there will be some retaliation and some not, and all that. But ultimately, they're trying to, with the placeholder, give us a broad sense of what this might look like. When we actually know the specifics, we'll be able to have still uncertain, but better informed forecasts. So yes, that's in there.
Last question goes to Jean.
On Bloomberg.
Hi, Chair Powell. Jean Young with M&I Market News. Had a couple questions on the balance sheet change that you made. So the minutes had initially described your discussion on slowing QT as temporary until the debt ceiling is resolved. But from what you said earlier, it doesn't sound like there's a desire to kind of regain the pace of QT that we have at the moment after the debt ceiling is resolved. Is that the case?
Yeah, so we looked at pausing and we looked at slowing, and really people came together very strongly behind slowing, not pausing, for a variety of reasons. And so people really came to be, pretty strongly in favor of this move. Slows down the path and probably lengthens it, doubles it effectively by slowing by half. That people thought that's a good place to be. It'll help us assure that this path is a smooth one as we get closer and closer to that. So that's how that came about.
Well, I guess my question is more, was that meant to be a temporary measure during the debt ceiling episode, or?
It was the TGA flows, Treasury General Account flows, that got us thinking about this. But the more we thought about it, we came around to this.
Tomorrow, Solana preparing for an ETF, 2 ETFs that track Solana. Futures to be launched tomorrow. This is from Bloomberg. I just saw this pop up on a few places. Let's see, that's tomorrow. Gold pulling back, that's what you want if you're looking for buys. You don't want to chase price on these green candles. Might seem like scary to buy on red candles, but I would wait. Like, it's coming back to 45 now. So if you look at 45, there is a resistance there. It already reacted. So if it doesn't react here, react here, then it's more likely we're going to push down to like 40. Which if you look at 40, you can even see at 40, there's a resistance there. So it's likely we could come even into there. Back around 40. Between 40 and it looks like 35. You could see between 40 and 35 area. You could see some previous structure there in price. So now it's dumping. It tapped 50, whole number. It's dumping down. Looks like it's going to come back into here. That would be a better area to monitor in the case of what's happened. I know it moved a lot, but you wouldn't, there wasn't really any. There was quick entries here, but like if we entered up here, there's nothing to really enter up here. So it could still come back, pull down, potentially react, but We've been on the charts a lot today. We don't have to overtrade, force everything. We're gonna be back on tonight. Like we're on this morning for 4 hours, and we did take a long time today to have that movement. We don't need to find every trade, every move, every little thing, because we're also gonna be on tonight. We still have tomorrow as well, and it looks like tomorrow might be a Solana day. Something's gonna happen there. That's interesting. Solana, how's Solana moving? Solana's obviously moving today because everything's moving today. But how's Solana 132 back above 130? Maybe we get that break of structure up tomorrow on the daily. That'll be nice. We'll see. We'll see. We'll be on tonight, same time I was on last night and the night before. It was 9:30. Again, we were on the charts like pretty much 6 hours today, looking for buys this morning. Ran up some analysis this morning. If you're looking for another setup, again, you don't have to force it. Like we did a lot of chart work today. You don't got to look for everything. You can you can take a break off the charts, go relax, chill. If you don't have to look for everything and anything, but if you're watching the charts, again, what I was saying is kind of happening. Bigger pullback, back into the zone. Let it come down though. Like let it come down. Maybe to, as you can see, it's on the way to 40. Looks like we could still come between 3,040, 3,035 there. Keep an eye potentially on that area. I'll be back on tonight though. Exact same time I was on last night.
Prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. Looking ahead, the new administration is in the process
He's
of
still talking. He's
significant
probably going to talk
policy
for like
changes
another
in
20,
four
maybe 30
distinct
minutes,
areas.
or
Trade,
longer. It could be
immigration,
less or
fiscal
more.
policy, and regulation. It is the net effect of
This
these policy
pullback
changes that will
this
matter
is like
for
the first
economy
bigger
and for
pullback
the
now.
path
It
of
could be
monetary
like something
policy.
like this. See this pullback that happened
While there
here.
have been recent
We're
developments
getting
in
like
some
a
of these
similar
areas, especially
pullback
trade
happening
policy,
right now,
uncertainty
shaping
around
itself
the changes
potentially
and
up.
their effects on the economic outlook.
So if you're looking
is
for another
high.
trade, or maybe
As we parse
scalp,
the incoming
could keep an eye on
information,
this.
we're focused on
Pullback.
separating the signal from the noise
Almost
as
came
the
down
outlook
to 3,040.
As we say in our statement, in considering the extent and timing of additional adjustments to the target range for the
I
federal
don't know what
funds
else
rate,
he's gonna. He's just
the
getting
committee
asked
will assess
questions. He's
incoming
getting
data.
interviewed. I haven't heard everything. Don't know if he said anything about crypto, but we had a lot of chart time, guys, and I know we'll be back on tonight. We got more to look at. These, so in this scenario, remember I even said earlier, you want price to even go up and make bigger pullbacks on the 5-minute. It was like the first bigger pullback on the 5-minute. 45 was right there. It almost came to 40. See? 40 almost reacted. Almost hit 40. It's still looking bullish overall. That's the crazy. Like, there's been a lot of movement. It's all-time high, but it's like you have low, high, low, high here. That breaks structure. High. It's just made a new high, breaking out this high. So it still has like a bullish dynamic to it. But tonight, Tokyo session, how many hours? Like 6 hours from now. We'll be on in 6 hours, which is 9:30 p.m. Eastern time. That's like Tokyo session. I like to get on the charts at those hours too, like 9:30, 10 o'clock. It's another good time to start looking at things. Maybe there's a scalp, maybe there's a quick move. You can also get a perspective of what happened for the day. Like, okay, like what did price do since because you don't got to be glued to the charts all the time. Check up on the charts later. Okay, what did price do for the day? Where is it now? But you're getting a pullback now on the 5-minute, which is here. I'll pull up some of the chart here. Pretty much like the first bigger pullback that's happened now. You have this zone obviously here, which is like 45, but then also I see down here, down here, which is around like 40. So there are two areas where it could react. I'm on the 5-minute chart right now. Right now I'm on the 5-minute. 3,040. I gotta make it a different color. This yellow is just throwing it off. 45 right now. Market's a little bit below it. Almost tried to get above it. So it's almost like it went underneath 45. It's almost like tried to come back to 40 there, 3,040. Potentially react off of there. Looking at like where things came from, like we came from here too. And then we moved, like we have resistance here, so it's like the volume is increasing up. Pullback, potentially continue, or deeper pullback, potentially continue. That's what I see for now. Like we're gonna be back on in 6 hours to check it out and see how things are moving. But yeah, Solana news tomorrow. Keep an eye on that. Solana or Solana coins even. Maybe there's some volume tomorrow for Solana in a different way. This is, I just seen this, so I didn't even know. This was today. Does it have a date on here? Yes, I'm assuming this was today. But this was posted on Twitter today. I just saw this on Twitter. But yeah, guys, we're gonna wrap it up. I'll be on in 6 hours from now.
How much of the higher inflation forecast
chart
for this
time
year
this
is
morning.
due to tariffs? And since the policy path
And
remains
we had a good trade. Like we can't get that trade back. Don't want to overtrade the market
price
either.
level shock.
Okay, so
back on tonight,
how much of it
tomorrow.
is tariff? So let me say that it is
Well, I'm gonna wrap it up.
going to be very difficult
We'll
to
be on
have a
tonight,
precise
Tuesday.
assessment of how much of inflation is coming from tariffs and from other, and that's already the case. You may have seen that goods inflation moved up pretty significantly in the first 2 months of the year. Trying to track that back to actual tariff increases, given what was tariffed and what was not, very, very challenging. So some of it, the answer is clearly some of it. A good part of it is coming from tariffs, but we'll be working, and so will other forecasters, to try to find the best possible way to separate non-tariff inflation from tariff inflation. In terms of your sort of looking through question, too soon to say about that. As I've mentioned, it can be the case that it's appropriate sometimes to look through inflation if it's going to go away quickly without action by us, if it's transitory, and that can be the case in the case of tariff inflation. I think that would depend on the tariff inflation moving through fairly quickly, and it would depend critically as well on inflation expectations being well anchored, longer term inflation expectations being well anchored.
Well, I guess I'm looking at the out years here, and the fact that the policy path doesn't change at all, and inflation is unchanged in the out years also, doesn't that imply you all have basically decided that there is no signal here, and that it's just we're back to transitory again?
So I think that's kind of the base case, but as I said, we really can't know that. We're going to have to see